Good evening, sir.
Good evening, Mr. Oman. How are you?
Uh, I'm fine, thank you. I'm sorry. Yeah, I am.
Okay.
My microphone was muted. That's why I couldn't
Okay. I just waited
reply
for
soon.
the participants. I think in these days have observed fasting, and it's the time of
Yeah, yeah,
prayer as well. So the people are busy for prayers. So
yeah.
I think the we will have to. I think 10 o'clock is the best time for the people to join us.
Yeah, absolutely. It means we can wait up to 10 o'clock.
We just start our presentation, and the people may join us during the presentation, and we'll see on YouTube as well.
Okay, yeah, is
Okay.
that's fine, sir.
So today our topic is the loan recommendation, the microfinance loan, and
Yeah,
the installment structure uh,
yeah,
in terms of declined method. So uh, when we we appraise a client, we first thing we see its income. And the first thing is the balance sheet, and the second thing is the income. So we just make a balance sheet first for a client, a micro client. So, Mr. Orman, you well know the balance, how make the balance sheet.
sorry, you say?
How we made a balance sheet.
Yeah, as for me, I don't know. I I wanted first of all to ask the question.
Okay.
Yeah, about I saw about the asset. Wh- What is the relationship between the bank balance and not payable?
Okay. You seeing my screen? My screen is visible.
Yes, yeah, I'm seeing it.
Okay. So at the left side, we have a balance sheet.
Yeah,
The balance sheet compromise on asset side and liability side. Okay.
yeah, I see.
And the asset, we first we see the assets.
Yeah,
Uh, the purpose of balance sheet to know about the client's net worth. What's the client's net worth? What's its credibility? What's its
yeah,
credit worthiness? Okay.
yeah,
So uh, first, first of all, we make a balance sheet. The balance sheet, we take a certain period. We make a 1 year balance sheet. At the we make a balance sheet up to 12 months at the end of December. What's the condition of the our potential customer? So at the time of we making an appraisal for a client, we see the balance sheet. The balance sheet, we first see the current assets, cash in hand, how much the cash he she are in hand. So
okay.
here we just for suppose we say that he has 50,000, 50,000 PKR, not dollar.
Yeah.
Okay.
Yeah.
Okay, 50,000 and bank balance. We suppose that he have 40,000 bank balance.
Yeah.
Okay. Account receivable. What's the account receivable? He sell his products on someone borrow his finished products, and he want he has the liability to receive these outstanding. So account receivable, he may sell on 25,000 account receivable. He has 25,000 account receivable. Inventory. Oh, the inventory is the finished things. The client have made the things, and he uh, spent some money on it, and the kept inside in his shop. We call inventory. So we suppose that he has 50,000 in inventory, and account prepaid. What's the account prepaid? He has some utility bill or other uh, uh, sorry, prepaid. His account, he take the material from someone, and yet not paid. Okay, so account prepaid, we say 20,000 he has in hand. Okay, the current assets. How much current assets?
Is 185,000.
85 PKR thousand. Oh,
Yeah.
yes. And the non-current assets. The non-current assets are the assets, or as the assets are not liquidated uh, in a for immediate effect. As such, buildings, furniture and fixtures, equipment, and we value the building here uh, 10 500,000 building, and furniture and fixture he has 100,000. The equipment current value, the equipment he used to make his products, we say that he have 150,000. Okay, so total non-current asset is 7 lakh 50,000, and the current total asset 9 lakh 35,000. Now we see his current liabilities. Account payable, as I earlier said, the account payable, he pay some expense in terms of utility bills or other. He purchased the things and yet not paid. The account payable, suppose we say that 30,000 account payable. Short term loans, he borrow some money from neighbors or in the persons he known in market, suppose 20,000. Not payable. The bank guarantees he have to paid, or he write some written agreement from someone to take some money. We call note payable. We take 20,000. Okay. So other payable miscellaneous 5,000. We suppose 5,000. And long term loans. What's the long term loans? Mr. Abdul Karim, you are with us?
Yes, sir, I'm listening.
Okay. So you know the long term loans?
Long-term loans means such loans he have signed with others to capital to increase his capital or
Okay, the long-term loan is that we are making the balance sheet 1 year balance sheet. The long-term loans, we consider that the loans are pay over 1 year. Okay, that are not affected our loan. Mr. Abdul Karim, listening? You listening me?
yes, sir.
Yes, yeah.
The long-term loans we okay, Mr. Oman, do you want to say anything?
I have a question. I wanted to ask, for example, every operation, what is the risk? What is the consequence if, for example, in one site, I have a short-term loan, and another side I have a long-term loan. Is it possible to have those two different loan in the same process, or is better only to have one kind of loan? Also, second question, uh, what is the consequence when someone have the same time a short-term loan and a long-term loan?
Okay. I earlier said that the short-term loan is that the loan he paid in the tenure of we appraising that client for 1 year loan, and he has some loans he paid 3 months later,
Okay,
2 months, 5 months, within 1 year. We
okay,
consider these loans as a short-term loan. That loan are affected our loans. Okay, we
yeah,
we consider the short-term loans, and the long-term loans over he pay the 3 year after or 2 year after, that are not affected our appraisal. So we say that a long-term loan. Suppose he pay 1 lakh, 100,000 long term. Okay, Mr. Arman, do you listening me? Mr. Arman? Okay, Mr. Abdul Karim, do you listening me?
Yes, I'm listening, sir.
Okay, so the when we put the all liabilities and the total current liabilities uh, and the total we make the difference between liabilities and the assets called owner equity. Okay, and the total liability and plus equity side equal to asset sides. This is called the balance sheet. Mr. Abdul Karim,
Right, right.
you have any question or you understand this balance sheet?
No, I got it. It's clear.
Okay. The always asset and is total equity and liability size equal, should be equal. So on behalf of this sheet, we can measure different our ratios. The total liability is 1,75,000. The total assets 9,35,000. This is liability. Okay, and this is the assets, and their difference is called 7,60,000 owner equity. So the first ratio we measure debit to asset ratio. How much his current his debit and how much his assets. So it's 18.72%. The additional debt can given 31. We make this difference on Mr. Abdul.
It's 30.
50%. 50%. His outstanding debit. We can't exceed our debit from 50%. Okay. So this is a standard measurement, but we use in microfinance the total current liabilities. Okay, with total liability, we don't consider the long-term liability. We just consider the current liabilities. His current liability is 75,000. Total current assets of 1,85,000, and debit to asset ratio 40%, 40.54%. And the additional debt we can give him 9.46%. It's our sheet recommended that we give him 9.46%. Mr. Orman, are you listening
Yeah.
me?
Yes, of course, yeah.
Okay. So on this sheet, on behalf of this sheet, we just calculate different ratios. But today we just want to know want to understand that in microfinance we must focus on the customer's cash flow. Mr. Arman, do you understand the customer cash flow? What is the customer cash flow?
I don't remember when is where I wanted to ask the question about cash flow charts.
Okay. What's your question, Mr. Arman?
Yeah, I wanted to ask. I saw that proposed loan amount. For example, the first lot we have 4,000 375. You understand? But here, proposed loan amount is the same here in 12 installments. Okay. How did we fund a 70,500
Okay, okay.
in
I
this? Yeah,
understand that you see this amount. We propose loan amount from debit to asset ratio. Okay.
yeah,
We total calculate the his debit and his asset ratios. Asset. And we calculate that 2,92,500. But we again calculate the current liabilities, his current liabilities, short-term liabilities, okay, and total current assets, and the installment proposed loan amount. I think you confused about from this sentence. It's a proposed installment, but the monthly installment should not be exceed, according to our this sheet. Okay,
yeah,
17,500. It's auto calculate. If you change these ratios, these all ratios auto make the auto calculation about proposed loan amount, about loan per month installment. He should have a validity to pay. Okay.
yeah,
So we just want to know about our clients client credit worthiness or credibility, net worth, what we call him. We just want to know about the sheet. The next sheet is the cash flow. So we see cash flow. First, we see cash flow. We see the income statement. Okay, Mr. Abdul Karim, are you with us?
Yes, I'm listening.
Okay, we make a balance sheet of client, but to make a realistic cash flow, we know about the client monthly average income. Okay, so we have a client who have a bread shop. Per month he sell 4,500 breads, and one bread price is 20 rupees. So in a month he sell 90,000. His sale revenue is 90,000. Cost of goods sold. The cost he paid for making the bread, wheat flour kg per bread, 13 rupee per kilo. Okay, Mr. Abdul Karim, you get the point?
Yes.
Okay, when we we divide 13 over 45,000, we get 346 kg. He used the wheat flour 346 kg, and 1 kg price is 160. So 55,000, 385,000 his cost. Sales net His net income 34,650 rupees. He paid salaries. No, he have no employee rent. He has his own premises. Electricity 5,000. Transportation 500. Tax and other fee 500. Other expense, financial cost, depreciation 1,000. Total business expense from here. Total business expense 7,000. Okay. Business net profit. We minus 7,000 his net sales after cost of goods sold. He get 27,615 rupees. So business net profit and other income, salary contribution, household member, if any member in his house have a job and get salary 35,000. So now we can total household made the total household income 62,615. It's a 1 month. Okay, and we get all these figure for a historical. We see his historical data. It's a forecast. We see his historical data and get these figure. These figure fluctuate in other month. Maybe in some month his sale be increased, and some month his sales maybe decreased. So his business revenue should be and must be fluctuate. Okay, so this is the household expense: grocery and food, transport, rent, utility bill, education. Grocery and food 20,300, transportation, utility bills 800, education 10,000, and any short-term liability, credit card, borrowing, investment he pay in this month, during the month 2,000. Miscellaneous expense 1,000, and total expense 45,000. 45,000, and net. Now we know that the total household income minus net family expense, it's 70,615. What this income called, Mr. Abdul Brahim? Mr. Abdul Green?
Yes, sir.
What this income called? We put all the household expense, business expense, and we got it 17,515. We call him a net saving. Excluded all the include all the expenses, household expenses and business expenses. We got
17,615.
So our installment should not be increased. We just make this income statement. For that, our loan installment should not be increased 17,615. It's we make an average monthly, but we make it on 12 months. And when we see the data for every month, his paying capacity as concern of cash flow. So now we make the cash flow now. This is the cash flow chart. Mr. Orman, can you see that?
Yeah, yes,
Okay.
I'm seeing everything.
Okay, we started from January.
Yeah.
We make our income statement from January. We revenue net of business. What is the revenue net of business? 17,000
Is 20,
and
20
15.
27,615.
20 yes, 27,615.
600,
Okay.
yeah, 15.
So the next month, what is your prediction for next month? We may suppose that 30,000. Okay.
Yeah.
And in March, we think 28,000. Okay, and April 30,200, and May 30,000. So on. We acquired that data from client, from his prediction about upcoming month. Okay. So income from salary, one person from his household maybe got have some kind of employment and got salary, and his salary, we suppose that he got 35,000 salary, and salary is on all 12 months maybe equal 35,000. Okay. And the income needed property or agri land. Okay, we just say that there is no other income, property and other income. Maybe he gets some amount during these months from his accounts, against his account. So we put here 5,000 and we put here 5,000. So total household income in this month 62,515. Just don't see these figures. Please focus on the month figures. Okay. 65, 65, 65, 70, 65, 65, 65, 70, 62, 63, 60, 5,000 and 62,515. Okay. Now we put the grocery and food. We say that 20,000. He spent 20,000 grocery and food, and we made a standard it. Get it standard. Transportation maybe 3,000. He spent on transportation 3,000. We make it also standard. Rent, he not paid any rent. He working and living on his own premises, own place. Okay. Utility bills. Maybe he pay household utility bill. It's household utility bills. We put it 10,000. and maybe here 15,000. And again 10,000. Okay, we education or spend on children education. We put 15,000 here. Okay, it's we get it standard, and medical expense per month we suppose 1,500, and also make it standard. Any short-term liability, maybe he gives some short-term liability, he borrows from money from mortgage or any household expense. So we pay 5,000, we put a 3,000, we put here 2,000 in these months. Okay. Miscellaneous, we put 5,000 in miscellaneous expense and make it standard as well. Okay. So now we know that his net cash flow per month. Mr. Orman?
Yeah.
Net cash flow per month. The first month,
Yeah.
8,115, 10,800, 500, 5,700, 5,500, 5,000, 5,500, 5,500, and this is his net saving per month. Okay.
Yeah.
So we make this saving as a accumulative. Accumulative, he save every month these rupees. Okay. So first month he saved 800, 8,115.
15.
And next month he saved 10,500. We make plus 8 and this figures and this figure from there. Total saving in 2 months 18,615. And
15.
we
15.
make these figure and add these figures. The third month saving 8,500. It's 27,115. And we add this saving, it sum up 32,815. When and from there, his total saving in 12 months, 1 lakh, 108,
10,000.
815.
Is
1,000, 1 lakh 1,815. Mr. Abdul Karim? Mr. Abdul Karim,
Yes, sir.
you get this point?
Yes, I got it.
Okay. So we see that his total saving, he made total save 1 lakh 1 lakh 1,815. So our loan amount should be less than for this client. Mr. Abdul Karim?
Right, right.
How we make this? We give the loan amount to this client. The client has 1,01,815 rupees net income. Mr. Abdul,
we calculated this amount from his cash flows. His
cash flow. This is the cash flow. We put all the figure in cash flow, and we see his monthly saving. We make the forecast of his expense and household income, and guess the net income per month. And total accumulative, we when plus all the monthly saving, we got at 1,01,815. So the standard procedure is that we give him the loan against his total saving, 50% loan against his total saving.
How much it's 50%?
50%.
Right.
Would not exceed 50% loan amount against is if we make a proper household cash flow, cash inflow, cash outflow, and see the cumulative saving of whole year, then we sanction him or her to 50% of that accumulative saving. Okay. Mr. Arman?
Yes, sir.
Okay, we may make any other sheet. So make it more simple. Okay. We make a cash inflows. As we salaries, one person in a house have a salaried person. He got 50,000. Okay. And salary is constant from all the month to December. Okay. And the business revenue, net business revenue, we got the net business revenue to excluded from all type of included all type of expense. He got 60,000. Okay. And we 60,000 and 65,000 and 55,000. It's fluctuate 62,000 in May, maybe 70,000 in July, 65,000 in July. Okay, 70,000 August, 55,000 and in September 60,000 in October 60,000 in November 60,000 in December 60,000. Okay. Other revenue, maybe he received some account from market of 5,000 in this month and 5,000 in this month. Okay. So cash inflow, total cash inflow per month, 1 lakh, 10,000, 1 lakh, 15,000, and so on. So cash outflow. Cash outflow is household expense. We just accumulative, we put here accumulative household expense. Maybe in this month 70,000, first month 70,000, next month 65,000, 78,000, 65,000, 68,000, 80,000, 78,000, 72,000, 79,000, 80,000, 75,000, and 77,000, all type of expense, household expense, grocery, food, electricity, utility bills, the children education expense on children educations, transportations. So we put in this here. So net cash flow after doing first month he saved 40,000, 50,000, 27,000, 47,000, 57,000, 35,000, 42,000, 33,000, 36,000, 30,000, 35,000. Okay. So accumulative, first 40,000, here we 40 and 50 plus 90,000. Next month is accumulative saving is 90,000. And add 27,000, 1,17,000. So it's going on. So the accumulative 4,65,000. So how can we give him the loan amount? His accumulative saving is 4,65,000. Mr. Abdul Green? Mr. Abdul Green, do you with us? So, Mr. Orman.
Yeah, I have a question about subtotal and net cash flow. Is it possible? Is it possible from January to December to have the same subtotal here?
Yeah, subtotal, it's we
Is it possible?
we plus all these the subtotal may be the same.
And for also for example, when it comes about medical expense, I'm not sure that from January to December, someone
Uh,
can have the same budget about
okay, it's
medical expense because the sickness
yeah,
is not the same every time, sir.
yeah, they fluctuate in every month. When we may appraise a client in actual basis, all the here we put the all expense. Yeah, it's household expense and the business expense. Okay, so we revisit it. The household expense maybe 60,000, 50,000, it's fluctuate. 70,000, 65,000, and 55,000, 65,000. They may fluctuate, but not have so much difference. If they have maybe in these month, they might have any kind of emergency, so they exceed their expense. But we assume a standard average expense per month, 70,000, 50,000, 60,000, 60,000, 55,000, and as we business expense 35,000, and so on. We counted, and here we make the cumulative as equal. But we here we put 35,000. Okay. So now we have the cumulative 15,000, 65,000, 90,000, and here 4,000, 4,40,000. This is the cumulative saving, his year saving. Mr. Yaman, do you want to say anything?
I have a question about interest rates, the declines method, and interest rate flats. Is it there is a time that interest rate flats can have a lot of percentage than interest rate declinage method, or initially a interest rate declinage method must have a high percentage than the other, or it depends with the period, it depends with the circumstance, it depends with uh, with the net cash flow. I don't know.
Okay, we see the monthly. We these two figures are very important for us. You see these two figures, Mr. Orman? 4,40,000. How we make this some 4,000 and 40,000?
What is the question, sir?
Just a simple question about, we put all the income of business and salary household income. Okay, it's called our cash inflow. Then we put household expense and business expense. You see that? Household expense and business expense. The total of household expense and business expense called cash outflow. Okay. This is per month cash outflow, and this is per month cash inflow. Okay. The difference between cash outflow and cash inflow and cash outflow, called net cash flow, is 15,000. He received the revenue 1,10,000 in Jan. Okay, and his expense on household and business are 95,000. The difference is 15,000. The 15,000 is a net saving. You got it?
Yeah.
Okay. So we draw all the net saving from all the 12 months. Okay. 15,000, 50,000, and 27,000, 47,000, 57,000, 35,000, 42,000, 33,000, 36,000, 30,000, and 35,000. He did the net saving. Okay. He will. We make a cash flow, and we assume that in end of year, to see his expense and his revenue, we guess that his net saving per month in Jan might be 1,500, and for Feb 65,000, and so on. 1,500, 50,000, and this is the cumulative. We make the cumulative saving. We see that in every month, what is his accumulative saving? He got the loan in Jan. Okay. And we see that in January, his saving are 15,000. But he saved 50,000 in Feb. And accumulative saving will be 65,000. And in February, March, he get 27,000 net saving, and 65 plus 27,000, it's 92,000. Okay, so we make all these saving accumulative and got this figure. At the end of year, he might be saved 4,40,000. Okay, Mr. Abdul Karim?
Yes, I'm listening, sir.
Okay, how we get this figure? It's a cumulative saving. Mr. Abdul Karim?
Accumulative saving?
Yeah, it's a cumulative saving. It's cash inflow. Cash inflow compromised in two things: salaries. One person, we making the appraisal for a client, first we will see his household in cash inflow. The one person in his or her house have a salaried person and got 50,000 salary in every month, and he got 60,000 from business. Okay,
Right.
and cash inflow 50,000 and 60,000 sum up 1,10,000 every month. We may the salary may be constant every month, but the business revenue may be fluctuate in every month. And
Right.
other cash revenue, he may get 5,000 and may someone borrow from him 5,000. He it's expected revenue in May, extra 5,000, and in September. And total cash flow inflow. January 1,10,000, 1,15,000, 105,000, 112,000, 120. It's cash inflow, and it's household expense, the food, the children education, the utility bills. It's a household expense, and this is the business expense. We make the total of these two figures 95,000 in Jan. His expense, we call him cash outflow, is 95,000. Okay, so we every month we get the cash outflow 95,000, 65, 75, 65, 68, and so on. So the net cash flow, we get now the net cash flow with cash inflow minus cash outflow. So he saved 15,000 in first month. Mr. Abdul Karim?
Right, sir.
You get this point?
Yes, got it.
Okay, he get 15,000, and next month 50,000, and March 27,000, April 47, May 57, June 35,000, July 22,000, August 33,000, September 36,000, October 30,000, November 30,000, and December 33,000. So we made a cumulative saving. First month he saved 15,000, and next month 50,000. 15 plus 50 equal to 65. Mr. Abdul Karim?
Yes, 60.
65. And 65 plus, please unmute your mic. Mr. Abdul Karim, please unmute your mic.
It's done.
The next month 65 plus 27, 92. 92 plus 47, 1,39,000. 1,39,000 plus 75. This is the net cash flow per month he saved after all kind deduction of all kind of expense. Okay.
Expensive.
So
Yes.
we made that. We see that in 12 months, in a whole year, his accumulative thing might be 4 lakh 40,000. 4 lakh 40,000. Okay.
Yes.
And the average net cash flow per month, we divide these saving on to 50%. This is average net cash flow per month against his net saving. This is these figures are important for us. We see that how much money he save in a month 50%. Again, how much the amount against 50% of his net saving is 7,000, 25,000. We divide here in this net cash flow, again net cash flow. Okay, we divide it on D10 divided to 2, and we get his worth to pay the installment. So we got it. We gave him the 50% loan. We recommend the 50% loan maximum, the 50% loan against this amount. The loan amount will be 2,20,000, and we pay his average cash flow per month. This is net saving. 50%, he saved 15 with 705. Half of every month, which he saved every month, we get half of this. And accumulator, we say that his installment not be exceed from 18,333 rupees. Mr. Orman, do you understand that?
Yes, I understood.
This figure, you guys look this figure. 4,40,000 is accumulative saving, and we can sanction the loan maximum. Recommend the maximum loan half of 50% of this amount. It's make 2,20,000. Okay. When we
Yes,
divide 4 lakh, it's a cumulative 4 lakh divided by 2, we got 2,20,000. Okay, and
yeah,
we see his 50% capacity of repaying capacity. From here, we see the 50% his repaying capacity. So if we give him the loan amount, we just ensure that his installment, maybe he got maximum 75,000 maximum revenues, net revenue, net saving, and it's half 28,500. Our installment not exceed that amount. So we see that amount, and we divide it in 12 installment. That amount we 12 installment, it's 18,333 rupees maximum. So we make our loan save on these exceptions, that we maximum recommend the loan 2,20,000, and the 12th installment 18,333 rupees. Okay, if we give him the loan for 9 months, Mr. Abdul Kareem. Mr. Abdul Kareem. Okay, Mr. Orban, if we want to give him the loan for 9 months, not 12 for 12 months, so what the amount was, what the amount will be.
I think that it
Okay.
can be less or 50%.
You just see these figure, cumulative net cash flow. If we give him the 9 months up to September, in September accumulative his what he save, what will he save? 3,42,000. That's why I put a accumulative cash flow, that if we want to give him or her for 9 months, we see this accumulative figure, 3,42,000. We divide it on 9 months. 3,42,000 divide 9. Sorry, divide 2, 50%. We give him 50%. So the loan amount maybe 1,71,000 maximum for 9 months. You got this point? Mr. Orman, you get this point?
Yes, sir. Yeah, I got it.
Okay, so we see the
Yeah.
accumulative cash flow. If we give him the for 6 month loan from June, his net saving from June, accumulative net saving 2,31,000. So we divided divided on 50%, 1,15,000. We give him with maximum recommend the loan amount 1,15,000 for 6 months. Okay, Mr. Abdul Karim. Mr. Abdul Karim.
Maybe he has a network issue.
Okay, so I emphasize on this for that for that you guys will understand that how we make the accumulative cash flow. The accumulative cash flow indicate that how much loan amount we have to sanction or we have to recommend. Okay, we recommend 50% accumulate against accumulative. We give him for 6 months, for 9 months, or for 12 months. Mr. Orman?
Yes, sir.
We give we maximum recommend the amount against accumulative cash flow, 50% of amount against the accumulative cash flow, and we guess our installment not be exceed from his net cash flow. Net cash flow means net saving. He have say 1,500, 50,000, 727,000, not exceed from this figure, and we not exceed 50% of this figure. So we divide these figure on two to take 50% of this amount. It's January 7,500, 25,000, 1,500, 13,500, 23,500. So we here we maximum amount will be sanctioned 1,15,000 and 15,000 and 500, we taqseem it from 6. So our installment will not be exceed 9,250 if we give him the 6-month one. Okay. If we give him the 220 lakh for 20 months, our installment should be 18,333 rupees, and it's match its average cash flow. So in this, this sheet will auto generated. We gave him the 2,20,000 loan first month. First installment receivable principal 18,330 rupees, and interest rate outstanding loan balance and KPR interest rate on outstanding 5,425, and his installment 23,758, and remaining principal 1,667, and so on. We divide equally, and the interest rate will be declined method. Principal every month deduct the principal amount 8,333 rupees, and remaining principal will be we put here and calculate, and the last installment 18,785,000, and the loan amount 0. Okay, I will share these sheets with you guys, and you will also make it practically, and if you have any question, you will ask me through WhatsApp, through call. Mr. Orman?
Yes, sir.
Okay. So, Mr. Abdul Kareem, you are with us.
Listening, sir. I have some connectivity issue, but now I'm listening.
Okay, okay. So you got this point. We take the net cash flow 2,20,000. Okay. We
Yes,
net accumulative cash flow we divide it on 50%. We got 2,000 2 lakh 20,000. It's the maximum amount we recommend, but we not recommend the maximum amount. For to see the risk level, we recommend that client maximum loan amount 2,20,000, but it's our decision. We how much amount we recommend him, but that amount not be exceed from this amount. So if we here recommend his monthly installment 2,20,000 in concern, if we sanction recommend him 2,20,000, his monthly installment may be 23,758, and we see that this may be a risky installment. So we give him 150 lakh. We recommend 150 lakh. So all the installments are changed 22,000, 21, 20, 20, 90, and it's a decline from okay, here we put the Here we divide the from here 150 lakh here, and we divide it on 12. So now okay, now our sheet is okay. So its first installment 16,190, 15,890. It's a declined method. This is the principal amount deduct every month, and we deducted outstanding amount. Remaining outstanding amount first month 1,73,500. We put it in principal, and we deduct the principal amount 12,500. Now we calculate the interest rate on 1,37,500, and the installment may be 15,890, and so on. The principal amount will be deduct from here. The principal in last installment, the principal amount is 12,500. The receivable loan amount here, and the risk interest rate is interest receivable is 308 rupees, and total installment he will pay 12,808 rupees. So Mr. Abdul Kareem, you get it? Mr. Abdul Kareem and Mr. Arman?
Yes, sir. I got everything. 100%.
Okay.
Yeah.
Okay. So now I will show some auto programmed sheets with you guys. Okay. So I
Okay.
go to my website. It's my website. Okay.
Okay. Okay. Okay.
Here, monthly cash flow and loan system. Here we put the salary. He got the 50,000 salary. Okay. Business, net business, explore all the expenses. He got 50,000. Other amount, maybe not. The expense, total expense, household expense, business expense, total expense, maybe 80,000. 80,000. Okay. So now we put the 50,000 salary in every month. We put the salary 50,000 in every month. And we put the business revenue 55,000 in Feb. 58,000. It's be fluctuate 58,000, 55,000. $757,000 and 60,000. Okay, 58,000. August 58,000. Okay, 100. Okay. 48,000. Okay, October 50,000 and November 50,000. December 55,000 and other we not put the other amount. Okay, we put the expense 80,000, 75,000, 78,000, 79,000, 70,000,
I
85,000.
have a concern, sir.
Okay. Please.
Yeah, I'm not seeing your screen, your presentation. I don't know why, because on my side,
Okay, you can't see the screen.
no, I'm not seeing. It's showing only the part of cash outflow.
Okay, you see you all, Mr. Abdul Karim, you are seeing the screen.
He's not yet. Maybe he has a problem.
Okay. I stopped sharing and share again.
Thank you. Okay, thank you. Yeah, now is fine.
Okay. So this is the auto program sheet.
Okay.
These are the months, salary, business revenue, other cash revenue, and total expense, business and household. Okay, we put the figure here, 80,000. Expense we put the salary 50,000 and the revenue, business revenue 58,000. Now we put the expense 75,000, 72,000, 75,000, 40, sorry, 68,000 and 70,000. Okay, we put the all expense, all the cash flow. In cash flow, we put the salaries, business revenue. Other we don't put here. Other we if he okay, we put it 5,000 in April and July 5,000. Okay, so here calculate net cash flow. It's auto calculate. Okay, we press the button auto calculate. Here we see the auto calculation net cash flow.
Yeah.
You see the net cash flow?
Yes, I see.
Okay. You calculate the net cash flow per month. Now, loan recommendation. Accumulative cash flow 3,75,000 and 9,900. We plus all these net cash flow is equal to 3,57,099 PKR. Okay.
Yeah.
And maximum loan recommendation 50% of accumulative net cash flow. 50% of net cash flow. It's 1,78,549.5
5.
VTR. You got this point? Mr. Orman? You get it?
Yeah.
You got this point?
Yes, of course.
Okay. Now,
Yeah.
now the program asking us inter-loan amount. With maximum the loan amount we may sanction, we may recommend for this particular client 1,78,549 rupees 0.5 PKR. It's the maximum
Yeah.
recommendation hour. But
Yeah.
here we recommend the loan amount. We may not give him the maximum loan amount. We give him the 150 lakh. Maximum loan amount, we may recommend him 1,78,549 rupees, but we want
That's fine.
recommend 1,50,000. Okay. So select month for how much month we select here for this amount. We put 12 months. We recommend these loan amount for 12 months. Okay. And
Yeah.
interest rate. We say that the interest rate is 30%.
Yeah.
We put the 30%. Now, it's auto calculate the installment. We press generate installment plan. These are the installment plan.
Okay.
Okay.
Okay, I see.
These are the installment plan. If we put 1 lakh amount, 100,000, and we give this amount for 6 months, interest rate 30%. Now we generate 6 for 6 months.
Okay.
So this cash flow give us an idea, give us a figure, the cumulative cash flow for the year of this particular client, and as per standard procedure, we can maximum recommend him 50% loan amount. But we recommend the loan amount to see all other factors, the cover conditions, his net worth, his social behavior, or other factors, to count the other factors. Then we recommend the amount, but this amount not be exceed from this amount, maximum recommendation. Okay.
Yeah.
So we get the installment point. We save our side, our bank side, that we met the maximum amount we should recommend him. We will recommend him. So if we recommend him 150,000 for 12 months, and the interest rate is 30%, we got the 12 installment. Installment, total installment 14,623 per month. The principal 10,873, and interest rate is 3,760 and 50. And the remaining principal is
139,000.
the remaining principal, and and the next Feb, the installment 14,623. The installment maybe will be equal, but interest rate is declined as per principal. Okay, monthly installment will be equal and the installment will be declined as per principal. The principal amount declined in every month and the interest rate will be total interest will be declined. Okay, and in 12 months it's when he pay the 14,623, his amount will be 0. You got this point?
No. My question now, why here in December we have 0 there? Here.
In December?
Yeah.
What?
Why do we have 0 there?
0? Okay, we give him the
Yeah.
12 months. For 12 months.
Okay.
The December is the 12 month loan and the December is the 12 month. We may our amount will be the 0. We recover all the outstanding amount. Okay. So in this website, you can also see the monthly income statement. Sales revenue 90,000. I put 90,000. Maybe we 80,000. The cost of goods 50,000. Electricity 6,000. Transportation 5,000, 10,000. Other business net profit 27,615. Household expense, grocery, transportation, etc. And when you put these amount, it's all auto calculate the total household income and the net family expense.
Expensive, okay.
Okay.
Yeah.
The total for 1 month. You put these in a cash flow sheet and calculate the next month and calculate the January, calculate the February, March, April, May, June. You may make the cash flow sheet to acquire from that particular client from his income sources and expense sources and make the this sheet, cash flow sheet. And according to cash flow sheet, you may get the you will get the cumulative net cash flow and maximum loan recommendation 50% against net cash flow. And here you put your amount. You maximum recommend 1,78,549, and you may give him the 150,000 for 12 months. If he want to give the loan for 6 months, you may recommend him 75,000 for 6 months. Here you put 6 months. You calculate the installment plan. It gives you for 6 month installment plan according to his repaying capacity. So I share the this link. This is my website. These are sheet, auto program sheet, and these Excel sheet I will share with you. You all the guys will put the figures and understand the balance sheet, cash flow, income statement. So next meeting, we will discuss with you. And if you find any difficulty, you may contact me in phone or on WhatsApp.
Yeah.
These are the very important things to understand for microfinance, microfinancing. Mr. Arman?
Yeah.
These are
Yeah,
the very
it was really, it was very, very, very interesting, very important stuff.
so. This is our today's presentation, and I will share it on YouTube. Other part will ask the I will ask the other participant to see the and make these things put the figures in these Excel files, this Excel file, and make the installment plan. And they get help from website from here.
Yeah.
So thank you very much, Mr. Armand, for your
Thank you
time.
so much, sir. I'm very happy, very satisfied about the presentation. Everything about microfinance loan. I think I'm learning a lot every day. Thank you so much, sir.
Thank you so much. Thank you very much.
Yeah, you are you are a good teacher. You are a good professor. I really appreciate. I respect so much your
Thank
skills,
you.
your
Thank you. Thank you,
leadership.
Mr.
Yeah,
Arman. I hope you will be learn something from this presentation and will be apply. Okay.
absolutely,
Thank you. Thank you.
absolutely. Yeah.